Imagine turning every financial crisis into a golden opportunity. While the world panics, you could be paving your way to wealth. This is not just a fantasy, but a reality for those who know the secret strategy. Recessions, often seen as economic downturns, can be the perfect time to buy assets at discounted prices. The key lies in understanding that the value of assets does not disappear during a recession. Instead, they become more accessible to those who are prepared. Historically, many wealthy individuals have recognized this pattern and capitalized on it. They have built their fortunes by purchasing valuable assets when others were selling in fear. This approach requires a shift in mindset. Instead of viewing a recession as a time to hoard cash, see it as a time to invest wisely. As prices drop, the potential for growth increases, setting the stage for significant financial gains when the economy recovers. Recessions might seem daunting, but they are also periods where opportunities abound. When the economy takes a downturn, it can feel like the world is closing in. Businesses struggle, jobs are lost, and uncertainty looms large. However, it's precisely in these challenging times that unique opportunities present themselves. During these times, asset prices often fall due to widespread panic and uncertainty. Stocks, real estate, and other investments can drop significantly in value, creating a landscape where bargains are plentiful. This is when smart investors step in. They see beyond the immediate turmoil and recognize the potential for future gains. By analyzing market trends and understanding the underlying value of assets, they make strategic moves that can pay off handsomely in the long run. They buy undervalued assets, anticipating that their value will rise once the economy stabilizes. This approach requires patience and a keen eye for detail, but the rewards can be substantial. The beauty of a recession is that it creates a buyer's market. With fewer buyers competing for assets, prices can be driven down, making it an ideal time for those with the means and foresight to invest. Sellers are often desperate to offload assets, sometimes at prices well below their actual value. This desperation can be a goldmine for investors who are prepared to act. For the informed investor, this is an ideal time to acquire assets that would otherwise be out of reach during economic booms. Whether it's stocks, real estate, or other investments, the potential for growth is significant. Consider the 2008 financial crisis. It was a period of immense economic turmoil, but also a time of great opportunity for those who knew where to look. Many savvy investors purchased stocks and real estate at rock-bottom prices. They understood that the market would eventually recover, and when it did, their investments would appreciate significantly. As the economy recovered, the value of these investments soared, leading to substantial profits. This pattern has repeated itself throughout history, proving that downturns can be golden opportunities for those who are prepared. It's a testament to the potential of strategic investing during downturns. By staying informed and making calculated decisions, investors can turn challenging times into periods of growth and prosperity. Understanding this dynamic is crucial. It's not just about surviving a recession, but thriving in it. By recognizing the signs and acting decisively, you can position yourself for future success. Recognizing that recessions are temporary and that markets tend to rebound can empower you to make informed decisions. It's about having the vision to see beyond the immediate chaos and focusing on the long-term potential. In the end, those who can navigate the stormy waters of a recession with a clear strategy and a calm mind are the ones who emerge stronger and more prosperous. When it comes to investing during a recession, diversification is key. This means spreading your investments across various asset classes to reduce risk. By not putting all your eggs in one basket, you can better protect your portfolio from the unpredictable nature of economic downturns. Different assets react differently to economic changes, and having a mix can protect your portfolio. For instance, while some assets may lose value, others might remain stable or even increase in worth. This balance can help cushion the blow during tough times. Real estate is one such asset. Investing in property can be a smart move, especially during a recession. During recessions, property prices often drop, making it a prime time to invest in real estate. Lower prices mean you can acquire properties at a discount, setting the stage for potential future gains. Over time, as the economy improves, property values typically rise, offering significant returns. Real estate can also provide rental income, adding another layer of financial security. Stocks are another asset to consider. The stock market can be volatile, but it also presents opportunities. When the market is down, many stocks can be bought at a fraction of their true worth. This is an excellent time to invest in companies that have strong fundamentals and a history of weathering economic storms. It's essential to focus on companies with strong fundamentals that are likely to recover. Look for businesses with solid balance sheets, consistent earnings, and a competitive edge in their industry. Bonds, especially government bonds, can also be a safe investment during uncertain times, providing steady returns. They are less volatile than stocks and can offer a predictable income stream. Precious metals like gold and silver tend to hold value during economic downturns. These assets are often seen as a hedge against inflation and currency fluctuations. They are considered safe haven assets, providing stability when other markets are volatile. Investing in precious metals can be a way to preserve wealth during uncertain times. Additionally, exploring alternative investments, such as cryptocurrencies or art, could offer unique opportunities for growth. These assets can be more speculative, but may provide high returns if chosen wisely. Diversifying into these areas can add an extra layer of potential to your investment strategy. Real-life success stories. Consider the story of Warren Buffett, one of the most successful investors of all time. His journey is a testament to the power of strategic thinking and patience in the world of finance. During the 2008 financial crisis, he famously advised, "Be fearful when others are greedy and greedy when others are fearful." This advice wasn't just theoretical, it was a principle he lived by. Following his own advice, Buffett invested heavily in stocks when prices were low. He saw opportunities where others saw despair, and his bold moves paid off. As the market recovered, his investments reaped enormous rewards. His story is a powerful example of how calculated risks during downturns can lead to significant gains. If you are finding this information helpful, please remember to like the video, subscribe to our channel, and share with others. Another example is a lesser-known investor, Sarah, who during the early 1990s recession, bought several foreclosed properties. Her story is equally inspiring. At the time, real estate was struggling, but Sarah saw potential. She recognized that the downturn presented a unique opportunity to acquire valuable assets at a fraction of their worth. She rented out these properties, and when the market improved, sold them for a substantial profit. Her ability to see beyond the immediate crisis and plan for the future was key to her success. Her foresight turned a modest investment into a lucrative venture. Sarah's story shows that you don't need to be a financial giant to make smart investment decisions. These stories highlight the power of investing during downturns. They demonstrate that with the right mindset and strategy, anyone can achieve financial success, regardless of their starting point. It's about recognizing the opportunities and being prepared to act when they arise, even if the timing seems challenging. By learning from these real-life success stories, we can better understand how to navigate financial challenges and come out stronger on the other side. It's time to take action. Now is the time to seize the opportunity. If you've ever considered investing, do not wait for the perfect moment. Economic cycles are inevitable, and recessions will come and go. The key is to be prepared and to act when the opportunity arises. Start by educating yourself. Learn about different asset classes and how they perform during economic downturns. Consult with financial advisors to help identify undervalued opportunities. Set clear financial goals and develop a strategy to reach them. Remember, fortune favors the bold. Don't let fear hold you back from making decisions that could change your financial future. Begin by taking small steps and gradually increase your investments as you become more confident. The potential rewards are worth the effort. Imagine a future where financial freedom is within your grasp. By taking action today, you can build a solid foundation for tomorrow. The secret to getting rich during a recession is not just about buying assets, it's about believing in your ability to make wise choices. You have the power to transform challenges into opportunities. By investing during downturns, you are setting yourself up for success. It's about having the courage to act when others hesitate, and the wisdom to see potential where others see risk. Your journey to wealth starts now. Embrace the opportunity, educate yourself, and make informed decisions. The path may not always be easy, but the rewards are waiting for those who dare to seize them. We are not financial advisors. While the strategies discussed here can be effective, it's important to note that investing always carries inherent risks. This video is not intended to be financial advice, but rather to inspire, educate, and inform. Every individual's financial situation is unique, and what works for one person may not work for another individual. We strongly recommend consulting with a qualified financial advisor before making any significant investment decisions. They can provide personalized advice based on your specific circumstances and help you navigate the complexities of investing during a recession. Always do your own research and consider all factors before making any financial commitments. Remember, informed decisions are the key to successful investing and financial stability. Stay educated, stay cautious, and take control of your financial future with confidence.